Hi, everybody. Thank you for joining us for another iteration of the Market Pulse. I have myself, Bepin, as well as Michael Sorrentino on the call with us today. The theme for this week is the theme that's going to dominate headlines for the next few weeks and probably all the way through to January until inauguration. And that is people care about politics, the markets don't. And now to start off, we got some housekeeping here. Our quote of the week, as always, it's one's from Bon Jovi. The more things change, the more they stay the same. It's from one of his famous songs. Just going into the theme for this week that every year or every 40 years, it seems like it's one of the most important elections of our lifetime, that there's major changes coming. And if the other side gets in, that basically all hell's going to break loose. Looking at the next chart here, the first chart on the screen, it's the same old song. The problems aren't new. This is from a recent Gallup poll from as of June 30th of this year, just asking voters what are the most important problems facing the country today. As you probably guessed, the general responses were the economy, high inflation, obviously, or the cost of goods have gone up, federal deficits, so government spending, immigration on the non-economic side here to the right, poor leadership, so bad leader, unifying the country. I know a lot of talk's been talked about how divided we are as a nation, how this is one of the most divided time periods of all time, or at least of recent history. And we just kind of wanted to ground that back to these aren't new problems. These are problems that have been around since really like the inception of this country. If we look at some quotes here from some of our founding fathers, James Madison, public debt is a public curse. You see, debt was a problem even when we were starting the country. You got Alexander Hamilton with immigration has served very much to divide the community. Immigration's always a problem. New people are always a problem. The distemper in our nation is certainly incurable. George Washington, they're the founding father of our country. It was divided even when we were writing the Constitution. There's always difference in opinions. And it seems that every 4 years we forget that these problems have been around forever and just think that it must be solved now. And if this guy doesn't get in, it'll never get solved. When in reality, it'll likely never get solved. These are problems that'll probably plague us through my lifetime, through my children's lifetime, through your grandchildren's lifetime. These are problems we don't expect to go away anytime soon. Speaking of markets or how we would react to them, a lot of investors, obviously, every time every time an election comes around, depending on who they think is going to get in or depending on who they're voting for, they like to make changes to their portfolio, whether it's, if this person gets in, I think the market's going to tank, so let's move to cash beforehand, or let's only be invested if my guy gets in. That's the only reason I want equities is if he or she gets in. This chart here is showing the growth of $10,000 if you'd invested in the Dow Jones since 1896, actually. And the dark blue line is showing if you'd invested only during Democratic administrations, and the light blue line is showing if you'd only invested during Republican administrations. And that gray line that you see going way up is if you just stayed fully invested. That means that you didn't adjust your allocation, you just held the stock market, regardless of who got into office. The difference was staggering. I mean, you're looking at $500,000 and maybe a little bit more on invested during just certain administrations to near $10 million. So the difference can be substantial. And that's just another reason we want to make sure we check our politics at the door when it comes to the financial arena.
Bepin, I've shown this chart so many times over
I
the
know.
past couple months, and I do it because I think it's so powerful. It's
Mm-hmm.
it based, and I showed it to Democrats and Republicans, right? Because
It's both sides, yeah.
it's both sides, and it really is. You said it. You check your politics at the door and say, where are we investing? Are we investing to win an election, or are we investing to
No,
make money?
exactly. That's the main point here. We're looking to make money, and we don't let our political emotions get the best of us. Speaking of most important election of our lives, let's narrow the focus here. So I know we were looking there since the 1800s, but then just look at the stock market over the last two presidential elections, or at least the last two presidents. The light blue line is showing performance under Biden for the first 900 and some days, and the dark blue line is showing Donald Trump for the full term that he served. And what do you notice, Mike? What's something that jumps out to you here?
Those lines look very, very similar. They
They
just
took
do.
different paths, yeah, but they finished in
Got to the same
relatively the
place.
same place. Exactly. And if you
Yep.
get rid of COVID or you get rid of a global pandemic, they're probably almost at an identical place. So these two politicians couldn't be more different, apples and oranges. But even though their policy differences or their policies may have been different, the performance has been the same or very similar, which gets to the next part. So let's say you do agree with us. Let's say I don't want to get out of equities or I don't want to get out of the market just because whoever's in office, but I do want to adjust my allocation slightly because I think this person's going to get in and he's going to be very bullish for this certain asset class or for this certain stock or whatever. That's typically a bad signal to use, I know Mike talks about this all the time in his writing. Politics does not equal policy. Doesn't end up working how you think. So if we look at the charts here below onto the left, you're looking at energy versus green energy. So traditional oil and gas versus green tech. Under the Biden or under Trump's administration, that light blue line is oil. As you can see, surprisingly, oil was down. If some of you can recall, I remember during like April of 2020, oil had gone negative. The price of oil, people were paying you to take oil, which you would have never thought under a president that was so pro oil, but he couldn't control that. He can't control the demand for oil. But then you see green tech over here, and not saying that Trump is against green tech by any means, but he sure wasn't pro green tech. And but look, it still performed extremely well. And what are the reasons for this? Well, cheap debt, it was 0% interest during this timeline. What do a lot of green tech startups need? A whole heck of a lot of debt. And then we look at the Biden admin and you get the exact opposite. You see oil actually skyrocketed under Biden, and obviously that attributed to quite a bit of the inflation we felt, as well as green energy took a dive. And again, that's a product of interest rates. Borrowing a lot of money is easy when it's 1% to 2%, but very hard when it gets up into the double digits. So
Well,
it's never as easy as, ooh, this candidate's pro this, so I'm going to invest into this asset class. It just doesn't work that way. There's a lot more fundamentals. I mean, this economy, $30 trillion, there are so many moving parts that you can't just pin down one certain signal and say, this means that I should buy this and it'll all work out because the policies he's going to enact are going to make this much more profitable. It just doesn't work out that way. And this is one of the most glaring examples.
yeah, I think what's interesting about that too, Bepin, is that I was at a conference a couple of weeks ago, and it was an infrastructure conference, and
Oh.
one of the portfolio managers was really pitching infrastructure as a strong idea going forward, and a lot of people in the audience pushed back hard on him, saying, "Look, if Trump wins, all this green energy stuff's going away." And I think it's a good example. I don't know if anyone's ever read the book Thinking Fast and Slow from Dan Kahneman. It's a phenomenal book. He talks about first order and second order thinking. That would be first order thinking. All right, if Trump
Exactly.
loses, or sorry, I'm sorry, Trump wins, then green energy is dead. But you got to go that second level thinking and say, okay, well, hold on here. Almost all of these green initiatives have been started in red states, not blue. Okay,
Yep.
Louisiana, places like that.
Mm-hmm.
Nothing is happening to these projects if Trump wins. And that was his argument. And I tend to agree, but that's just an example, to your point, of a lot of times you can't just say, well, if this, then that. You got to think go a little bit deeper and just not rely on one data point. And I think transitioning over to the concerns around the deficit,
Yep.
I think what's interesting here is, and I think we all know now that for all intents and purposes, Trump and Kamala are both ignoring this. I mean, no party, neither party rather, has put an ounce of effort into talking about how they're going to shrink the deficit. All right. Now, and I was the one for 15 years, ever since the financial crisis. I kept telling investors, ignore public debt, ignore government debt. It is not a problem, at least not yet. I have to admit, we're kind of flirting with
Becoming a problem, yeah.
problem, but you can kind of see it along the horizon now. And it is a problem. Look, but ultimately, I always joke around about Republicans as well. It's like, look, I can't remember the last time Republicans looked like Republicans. I mean, since George Bush, I mean, since this millennium, 25 years now, Republicans have spent the same way Democrats have. So, I mean, I think that's just that's a natural reality going forward of our economy is that we will have a deficit. And the kind of the paradox of this is that the one president that tried to eliminate the deficit was Clinton back in the 90s. And for a while we ran a surplus. It was very small, very short, but we got rid of the deficit. You want to know what happened? All right, what happened was in many ways the financial system of this country started to bend and not break, but it bent and got really weird. All right, think about it. Let's say you're a retiree and you want to earn some risk-free risk-free income. Well, if there are no government bonds, where are you going to get it? You don't. A lot of times you don't think, how do you price a mortgage if you don't have government debt to price it based off of? Like all these little things that we start thinking about that, well, maybe the answer is no deficit. Maybe the answer is no debt, but we do need to figure out a way to shrink this. Look, it's going to be hard to say what happens based on who wins, but I guess my point here is that, look, is this becoming a problem? Yeah, it kind of is. All right, it wasn't like it was 15 years ago, but at the same time, it doesn't matter what party wins. 4 years from now, the U.S. government's not going to default. So we got to be realistic on timelines on problems that we see coming and when they're going to actually hit. And I think that's a very important thing right now. What's going on right now is that both parties are spending and both parties will continue to spend, at least in my opinion. And I know there's a lot of, I find it to be interesting. It's kind of like the World Series right now. You got Yankees fans and you got Dodgers fans, okay? And no matter what, I lived in New York City for a long time. No matter what you do, you're not going to go into the Bronx and go to a Yankees fan and say, hey, let me tell you why you should root for the Dodgers. It's not happening. They will not listen to you, okay? And it drives a lot of fierce animosity in sports teams. Obviously, sports are not quite like politics, but the same mindsets do exist. And if you think about the country's view on the presidency of, I guess you could say Biden, but I mean, Trump had the same thing. You go back, Obama's approval rating, George Bush Jr.'s approval rating was not very good when he left office. These approval ratings, very rarely do they end high, all right? So I guess my point with that is that if you kind of broke down the S&P 500, I love this chart. I don't know where you found this, Bepin. This is a great chart. The S&P 500 index return by presidential approval rating, going back, call it 60-something years, okay? Even when the president has a subpar, or I guess below average, not average, it's a bad word, or below 50 rating on their approval rating, excuse me, rather, all right? You're still seeing a 9.3% annualized return, all right? That's a big number. That's a huge number, right? I don't remember a time in the history of our country where inflation sustained a rate higher than 9.3% for more than a few years. So you're still talking about the world's greatest growth engine, the U.S. economy, churning along and producing economic profits for companies, turning into profits and dividends for shareholders. I think that ties into, if the U.S. economy is the greatest growth engine we've ever seen, and it is, by far, no question. What is the fuel that drives this engine? And it comes from two sources. We talk about this a lot: entrepreneurship and innovation. So Bepin, I got a story for you. So I was in Los Angeles last weekend. I'm not proud of it, but I was there with my family, my two daughters and my wife. And I had to go from Santa Monica to Venice Beach, which is about, well, if there was no traffic, it'd only be like 5 minutes, but in LA, it's like 25 minutes for no reason other than people are psychotic drivers there. So anyway, I'm waiting there, and I said, you know what? I'm gonna order a Waymo because I heard all these great things about Waymo. So do you know what Waymo is?
Yes. Yep. Actually, is that the one connected with GM, or is that no? That's with Google, right?
They're using Jaguars, and I think so. Basically, for those that don't know, it's a driverless car. I'm not kidding. These cars drive around LA, and there's nobody in the driver's seat. And I thought everybody swears by them out there. I'm like, okay, I've got my young daughters with me in LA traffic. I'm like, you know what? Let's roll the dice, okay? So I order one, and this thing picks us up, and it drives us 15 minutes to our destination, makes amazingly accurate turns. It was an aggressive driver when it needed to be. It avoided pedestrians. It was one of the most amazing things I've experienced in my life. I am not even slightly exaggerating. It was jaw dropping. Okay. And then very rarely in my life, at 47 years old now, does my jaw drop like this. And the reason why I bring this up is that is one example of what is driving our economy right now. Okay. It's driverless cars, it's artificial intelligence. When I think about consumer trends out there, how much money people spend on their pets. Okay. When I think about the video game industry, it's bigger than movies and music combined together. And it is growing at a growth rate that neither of the other two has ever seen before. Okay. I'm talking about CAR T technology, NK cell therapies, customized cancer treatments. I could go on and on and on. And what I love about all of this innovation, two things. One, 95% of it's happening right here in the United States. It's all here. We've got a tremendous home court advantage. And the second thing is that we are in the early innings of this stuff. Okay, we're going to look back 10 years from now and laugh how we're living. Those Waymo cars that I was in last weekend, we're going to look back 10 years and say, I can't believe I got into that car. It was so archaic. That's what's going on right now. All right. And those brilliant scientists outside of Boston back in March of 2020, they were curing cancer. They didn't stop. They didn't go home. All right. Recessions don't slow this type of innovation down. Okay. And it doesn't matter who's in the White House. It just doesn't. All right. At least not yet. There's a great quote about technology, is that technology has never moved this fast before and it will never move this slow again. All right. These are investment trends that have real fuel in them, and they are about to explode. And we want to stay invested in them. From a pure investment standpoint, it doesn't matter who wins in November, because the entrepreneurship and innovation that has driven the economy so far, it will continue. It absolutely will. So let's leave on a high note. In 2 weeks, when we come back, I'm not saying that we'll know who won the election.
Probably not.
Probably not. Yeah. But I mean, it'll at least be somewhat in the rearview mirror. Hopefully. So let's all take a deep breath, relax a little bit. If your team loses, keep it together, and just realize that entrepreneurship and innovation that's driving the economy will continue for the foreseeable future. Thank you.